Hello, this is Chuck Carnevale, co-founder of FastGraphs, the Fundamentals Analyzer software tool. This video is designed to provide a basic introduction to the historical FastGraph in order to illustrate how it functions and what it reveals. What differentiates FastGraphs from other research and graphing tools is our focus on the business behind the stock first and then price secondarily. The orange line on the FastGraph plots earnings per share. You can see earnings per share listed at the bottom at a multiple that connotates fair value or the intrinsic value of a company. The details of the factors creating this orange line can be found to the right under the FastFacts color-coded box. As you can see, Church & Dwight has been a very consistent generator of earnings per share as they've consistently grown over the 15 years this graph represents. These next examples are designed to illustrate how you can instantly view a company's operating history to see how the business has performed. Here we see Caterpillar, a relatively cyclical company. Alcoa, even more cyclical, where earnings have been all over the place. And then if you look at Eastman Kodak, you can see that earnings per share have been collapsing over the last 15 years. And then our final example, we'll look at United Technologies, another example of a company that's had good, strong earnings growth with only some minor interruptions during the Great Recession of 2009. When you overlay monthly closing stock prices on the graph, you see two things that are very important that are revealed. First, you see how price correlates or generally follows earnings. But you also see periods where overvaluation occurs when the price is above the orange earnings justified valuation line, and you see undervaluation occurring when it's below it. This helps the user determine whether a stock is a fair buy or not. Although the orange line represents a benchmark of fair value, the market doesn't always cooperate. Therefore, FastGraphs also adds a normal PE ratio line, which is the blue line on this graph, which illustrates what price-earnings ratio the market has historically, on average, awarded the company's stock price over time. The final component of a fully functioning FastGraph represents dividends if the company pays any. Dividends are expressed as a light blue shaded area. Although they are paid out of earnings, since the stock market will capitalize all the earnings, as you see here with the price tracking the orange line, dividends will represent an extra return. In future videos, we'll talk about performance and how FastGraphs calculates performance. But this is a simple introduction to the historical FastGraph, and this is a complete graph. We have earnings, normal PE ratio, monthly closing stock prices, and dividend.